the idea of order blocks and supply and demand is too complicated for you, then I've got the right tool for you guys to use, right? So in today's video we're discussing the Fibonacci and exactly how we are going to be using it, right? So before we go right into the video, I want to show you how you set up these levels, right? So I've got my SL levels over here, my 7960 OTE levels, and all that stuff, right? So I want to show you exactly how you can use this, right? So this you can also set up on your phone, right? So just right click and then let me show you the levels, right? So right here I want to go to where it says levels over here, and I want you to copy these levels exactly as they are, so that this strategy can be helpful to you, so that you use it the way I do, right? So right over here, the first level is the level 0, that's our scaling TP, right? And the 0.382, right, that's the 38.2%. 0.5 is the 50%, right? This 0.618 is the 61.8%. So you can just call it 62% for to make it a little bit easier, right? And the one is our ASL, right? It's our stop loss, though I'm going to show you exactly how you go around with this, because most of the times it doesn't work perfectly, right? And the 0.7 is the 70% OTE, right? So take note of the OTE levels over here and the TP levels that I'm going to be showing you in down below, right? Then the 0.79 is the 79% OTE, right? Then the negative 0.27, take note of the negative 0.27, that's our TP1. Then the negative 0.62, that's our TP2, and then the negative 1, that's the symmetrical TP, right? Then after that, you just click OK, right? So you can set this up on your phone also, just copy the same levels exactly as they are, right? And then you click done, right? So right over here, let me zoom out a little bit, right? So what are we going to be using these levels for, right? So when you are in a market, right, so the market is trending down or up, right? So the Fibonacci, we usually use it or when there's a trending market, just like our order blocks, right? So you are right over here, right? So first find out the trend, so you can go to a 1 hour time frame or whichever time frame that you'll be using, right? So mark you see that we are going lower low, lower high, lower low, lower high. So we are continuously calculating a series of lower lows and lower highs, lower high and lower low, right? So we are in a downtrend because the last break of structure was a break of structure to the downside, right? So right over here, we're looking forward for selling opportunities for whatever comes after this, right? So whatever is here, we're still looking forward for selling opportunities, right? So right over here, how are we going to be using these levels, right? So after our trend, after impulsive move, right, just like what we do for supply and demand, we want to wait for a pullback, right? So when that pullback starts, right, that's where we are going to be marking our Fibonacci, right? So how do we draw the Fibonacci, right? So if you are drawing the Fibonacci, if it's a downtrend, you are drawing it down, right? So you take your Fibonacci, right? It works also as for your phone, right? You mark the highest point, right? You start from the highest point and then you pull it downwards. If that is if you want to enter for a sale, right? That's how you mark it, right? Let me just delete this and show you for an uptrend, right? So let's say we wanted to buy over here, right? So we take it from the lowest point going to the what, to the highest point, right? So we take it from the lowest point going to the highest point. As you can see now, our TP levels are above because we are buying, right? And here our TP levels are below because we are selling, right? So that's how you draw the Fibonacci, right? Then now, where do you enter, right? So for our entry levels, so wait for a pullback, right? When the market starts pulling back, that's when you'll be able to draw a Fibonacci, right? And over here, our entry levels are going to be 38.8, 50 level, 61.8, and 79% OTEs, right? So the first preference, the best levels to enter are going to be from the 61.8 to the 79% OTE. These here are the best, right? These are the best entry points, right? But the 50 also works, right? It's still okay, right? But I don't like to enter on the 38.2. It's way too far, right? So as you can see, if you enter here, right, and it hits your stop loss, see where your stop loss is, right, and see where you entered, right? So that's why the 79% OT is the best, right? Because if you enter somewhere in this region, right, this order block over here, so if we were to mark our order block, it would be this last green candle over here, right? So that's also where our supply is, right? So that order block over there, that's where also our 79% OTE levels are, right? So this will be the best. Why? Because as you can see, if the stop loss is very small, right? So if you are comparing this, right, let's say we are using this stop loss and we entered over here, right? We enter over some over here, right? See this stop loss over here, work from here to our entry point, right? And our potential first TP level will be our scaling TP, right? So as you can see, to the scaling TP, right? So this is easily a 2s greater than a 2:1 is a 3:1, 3:1 usually, right? So right over here, if you enter around this, if you get an entry around the 79 and 61.8 levels, these are the best levels to enter because your stop loss is quite small and your first TP level, which is the scaling TP, is quite further away. So you know that your risk reward is in good condition, right? So how do you use this stop loss? So let's say we've put back right now, we put back to the 61.8. I think that's the highest point it went, right? So let me just use my crosshair, right? Yeah, the 61.8, that's the highest point that it reached, right? How do you know when to enter? That's when you'll be using your candlestick confirmations. I'm not talking much about candlestick confirmations, but right over here, right, you can enter on the 50 level, right? When there are these small dodgy formations over here, right? Then it continued going up, up. Then over here again, you enter again when you see this red engulfing candle. It completely engulfed this previous green candle over here, and there's another red engulfing candle over here. So you can enter there, right? Or maybe you want to maybe draw your trend line, right? So that you enter when there's a breakout of that trend line, right? So if you draw your trend line, right, there's a breakout and then a retest to that trend line, or maybe you draw this trend line over here, whatever it is, whatever you drew, and you enter after that breakout, and there's also a retest. But if you are entering using the trend line, I just suggest that you enter at the breakout, right? Because sometimes the pullback may not come, right? So you just have to use your breakout, right, so that it is simpler for you, right? So over here, right, our stop loss, right, though I used this over here, right, though I marked the highest point is our stop loss level, right, I'm not going to be encouraging you guys to place it exactly at this high, because most of the times, I think I'll show you some examples if I come across some, right? Most of the times the market can come to this area over here, right, and break past it a little bit and then continue going downwards, right? But most of the times they wouldn't have given you a candlestick confirmation for you to enter by then, right? So most probably you might not have been in that trade, but the problem comes if you use pending orders, right? If you maybe are setting your sell limits or your buy limits. If you are setting your limits, I encourage you to put your stop loss a little bit higher than the high, right? So that your trade has a chance to work out, right? So that's how you mark your order blocks and you enter around these levels. These are the best, right? And your first TP, right? So let's say you entered maybe 3 or 4 positions, right? So your first take profit is going to be your scaling TP. That's when you exit some of your trades, right? Maybe if you had 4 positions, you can exit 2, right? And when you reach TP1, you exit another one, right? And if you get a chance to reach TP2, you exit the other remaining one, right? But when you reach TP1, I encourage you to shift. In fact, when you reach scaling TP, I want you to shift down your stop loss to put your entry in profit, but just in profit at break even or slightly in profit, right? When you reach your TP1, move your stop loss again, right, to put it more in profit. And when you reach your TP2, you can just exit the trade or wait for your symmetrical TP. But I don't encourage you guys to wait for the symmetrical TP because sometimes the market doesn't get to it, right? Because we are saying this symmetrical TP is there, so like the furthest point that we are anticipating that the market can reach, right? So as you can see over here, right, it reached our symmetrical TP, right, and started pulling back, but it even continued even further. But if you reach the scaling TP, if you reach this symmetrical TP, then you are in very good luck because it's rare for the market to do that, right? So that's just how you use your Fibonacci, right? So you just have to wait for a breaking structure, right? So over here, broke structure to the downside. We mark from the highest point going to the lowest point, right? So the highest point that broke the structure was this, right? We drag it down, right? And then we drag it to the right, to the future, right? Where we are going to be entering, right? So over here, as you can see, this is where your stop loss will be, right? You mark this area over here. That's where our order block is. That's where our supply zone is, and it's also coinciding with the 79 and 70% OTE levels. So the Fibonacci, you can just use it if you don't know much about supply and demand. You enter, you hold, you reach your scaling TP nicely, and you reach your TP1. Is just that it's quite that simple, right? So over here again, right? So let's see over here. This is an example where I was saying that you shouldn't place your stop loss exactly at that immediate level, right? So let me just first of all show you what's happening over here, right? So we were going up, right? So we're continuously creating a series of what higher highs, higher lows, higher highs, higher low, higher high. Then this one broke past it a little bit. Then we broke again, higher high, higher low, higher high, higher low, higher high. So if you are to take this area over here, we're back in what? In an uptrend, right? So let me just show you what I'm seeing over here. Right, as you can see right over here, we are going higher high, then we break this structure, right? We have a pullback, then we break the market structure here and here, right? So now we are in an uptrend, right? So we mark the move from the lowest point going to the what? To the highest point, right? So we mark from here going to the what? To the highest point, and then we drag it to the future, right? So right over here, as you can see, if you had entered somewhere maybe over here, right, at the 79% OTE, right, your stop loss would have been hit, right? But I don't see a reason to enter on this leg over here. So as you can see, this is sort of like a W, right? But of course, over here you wouldn't have entered, right? But you'd have entered somewhere over here. When you see this one, when you see this candlestick confirmation, the market is creating wicks to the downside. So obviously your entry might have been somewhere over here, right? That's when you'd have entered, right? And if you place your stop loss here, right, the market just came back, hit your stop loss, and continued. It rallied fast back into profit, right? So I don't encourage you guys to place your stop loss immediately over there. Maybe you can just shift it down a little bit, maybe to this low over here, right, or just slightly below. But this low below over isn't this low over here, that you'll be guaranteed that your stop loss won't be hit that fast, right? And then you entered, you'd have taken another entry over here, right, when this green engulfing candle over here, right, and you went into what? Into profit, right? So that's how you use what? The Fibonacci, right? And then we, as you can see, we smoothly reached our TP1, right? So if you want to learn more about the Fibonacci, and so as you can see right over here, it's just the same thing, same concepts, right? But the best pullbacks, this is the best pullback that you can get, right? The pullback that's so like consolidating, right? And it reaches these levels over here, unlike this flat pullback. This flat pullback just shows that the market still has momentum, but if the pullback is no momentum, just like this, it shows that that setup is most probably going to work, right? Most of the times that those setups are respected because the market does not have momentum to continue rallying in the opposite direction, right? So if you want to learn about supply and demand, because supply and demand is much more in depth, then I suggest that you watch this video next.